This week, I made $1,500 day trading a $100,000 trading account with the 5%ers. And in this video, I will share exactly how. Hello and welcome back to my channel. If you're new to my channel, welcome. My name is Emily and on Mindfully Trading, I share my journey as I grow and develop as a Forex trader. I originally started day trading the US stock market around about 5 years ago, and since then, I've gravitated towards day trading Forex. I day trade full time and I'm also a full-time mother. I juggle 2 boys under the age of 2, so it is definitely a busy time for me in my trading journey. And if you are one of my regular subscribers, hey, welcome back and thank you so much for supporting the channel. There's a couple of things that I want to share with you, a couple of updates before we dive into the main content today. So first of all, I've noticed that we've been having a lot of fake accounts commenting, pretending to be me on YouTube. So just a reminder for you guys to be vigilant because I don't want you to get caught out in any scams. A quick update for you guys, if you have email me in regards to my upcoming ebook, Forex Trading 101, a guide for beginners. It isn't available just yet. It's still in the making. It's not long now. It's going through the final processes of editing. So if you do want to join the waiting list, I have got an email that should come up on the screen. Feel free to drop me an email and I'll add you to the waiting list for the ebook. And finally, on my recent video where I shared one of the trading indicators that has transformed my trading, I've had quite a lot of comments on that video. I've not had time to go through every comment yet, but there was one comment that stood out and I wanted to highlight that. And it was somebody saying that anybody can share a recap from a past trade, but they want to see live trades. Well, the reason I'm highlighting that with you now to answer that is because I literally am in a position at the moment where I cannot share live trades with you, unfortunately, because my live trading process is so busy. I am basically juggling breastfeeding a baby whilst keeping the other one from beating us up and taking a trade on my mobile phone. So trying to record that live, firstly, wouldn't be pretty, and I just wouldn't be able to do it because I'm lucky enough to be able to trade as it is with the boys at the minute. But by all means, when I'm in a position where life is a bit more calmer for me, I will certainly be sharing some live trades and I look forward to doing that with you and helping you to grow from those. But until then, I'm going to just share the best that I can with what I've got. So as always, all of the resources I'll be using in this video today will be linked in the description below. I do often get asked what the best broker is, especially for beginners. So if you are a beginner starting out, I have got my broker in the description below. I have recently moved to Vantage and there's quite a few reasons why, and I'll share that in a separate video, but I found it to be a great broker. It is safe and there is a free demo account as well. So it's a good one to get started on. Before we jump onto the computer to look at my trade breakdown, first of all, what makes this week so special? Why am I sharing this with you? To be honest, absolutely nothing. In fact, this week has sort of been a bit poor for me because I've not had one decent trade. I've not had one trade where it's hit my original take profit, and I've not had any massive winners. Nothing special at all, which is why I'm sharing it with you, because it's so important to remember that trading isn't always about aiming big. It's not about taking those massive winners. It's not even about making lots and lots of money. In my opinion, trading is more about managing risk, especially during those slow and quiet days, to be able to survive until you can thrive, and more importantly, to finish green. And that's what I've done this week. Now, don't get me wrong, I could have definitely traded better this week. In fact, when I reviewed my trades, I realized that if I had taken my original profit targets, I could have actually doubled the week's winnings. So I could have ended up making $3,000 instead of $1,500 if I had just traded my original trade ideas. I'll show you more about those later in the video. But this is the nature of trading. It doesn't always work out the way that you want it to, and it's just so important to not let the emotions take over and take control. And that's why I'm sharing this with you today. I'm sharing with you an insight into an average trading week, what it looks like, and hopefully you'll be able to take something away from it for yourselves. But during a slow, choppy week, I have been trading one pair, and that is pound dollar. We are currently awaiting the NFP news release today as I'm recording this, so it's been quite an unsure week, and this is how I did. So here is my account with the 5%ers. I am in MetaTrader 5. Here's my account history. So I took one trade on Monday, the 4th of December. I didn't trade on the Tuesday. I took a trade on the Wednesday, and I took a trade yesterday. So I've traded 3 days this week. As I said, I'm recording this Friday. NFP news release is due out this afternoon GMT, and as it stands, I'm not looking to trade because I'm quite happy with where I am in my account, and I have the boys this afternoon, so I'll be lucky if I get time to, but we will see. But even though I've had no massive winners, I've had nothing special happen this week, I'm still happy with my week because as you can see, I've made a nice profit, and after the commissions, I'm up just over $1,500, which works out for me at 3R because 1R, one risk for me, I risk 0.5% per trade. So that's about $500 per trade. So I'm up 3 times my risk on the week, which to me is pretty good for a slow, choppy week. I have received quite a lot of questions from subscribers asking about the prop firm that I use. So I just wanted to show you the 5%ers before we dive into the main meat. Here is their website, and the 5%ers have 3 different programs available for their funding options. So they are a prop firm, and you basically have to pass a challenge with them to be able to trade a live account. Now, the hyper growth program is an instant funding account, so you can basically trade that, and once you hit the profit target, then you're able to start taking your own profit withdrawals from that account. The high stakes, that's the program that I'm currently on, and I'm on the 100K account. That's a 2-step program. So you have to basically pass 2 challenges, and then you get access to the fully funded account where you take a profit split. So it starts off at 80% profits to the trader, 20% to the 5%ers. There's also a bootcamp program, which is really good, especially if you are on a low budget, because it's a very low cost option. It gives you the opportunity to scale up over time to trade those larger account sizes. So if you want some more information on the 5%ers, if you are a consistently profitable trader and you want to take your trading to the next level, make some serious money, I've got a link to them in the description below, so make sure you check those out. Okay guys, so here we are on the daily time frame for pound dollar, and it's quite interesting to start off here because you can see exactly why it has been a slow and choppy week. So let's have a look. From the Friday of last week, price closed right at the highs, and so far this week from the weekly open, price has literally just been in this phase of pullback. So on the Monday, we had a big drop down. Tuesday, Wednesday, Thursday was a little bit of a push up, and currently we are just trying to drop again. So as you can see, it's very clear that we're in a phase of pullback, and it explains why it's been slow and choppy. Now, if you are a swing trader, you probably would have struggled this week. You wouldn't have produced many opportunities for trading because there just hasn't been any movement. There's no volume there. The candles are very small. Whereas for day traders and scalpers such as myself, we can still find opportunities to trade in this period of pullback. But it's just important to keep in mind that when you're in a period of pullback, first of all, the market is still in this long-term uptrend because on the daily we've been making higher highs and higher lows. But because we're in pullback, it's not clear whether or not we are pulling back until we get some momentum to continue the uptrend, or whether we are pulling back and then the momentum may come in for a deeper pullback or maybe even a trend shift. So this is always a phase in the market where it's uncertain, and it's important to keep that in mind when making trading decisions. And that's why for me, I've made very conservative trading decisions this week. It may appear that I have cut a lot of winners short, but that is because I've had this overall view of the daily chart at the front of my mind through the entire week, and I have been focusing on protecting capital rather than aiming to make more capital. So I've just moved on to the 15-minute time frame, and you can see these vertical dotted lines. They're called session dividers. So these basically just highlight the different days of this week, and this is that pullback that we were just looking at on the daily time frame. So from the start here, the Monday, we just basically dropped off and sold off throughout Monday, Tuesday, Wednesday, Thursday, and currently Friday. Not a lot of movement. We've just been in this steady downtrend. Well, my first trade was actually taken during this little tiny pullback here on the Monday. And it was a fairly simple trade. I took it on the faster time frame, the 5-minute time frame. And after we'd had this big drop off during the morning, it was clear to me that we were pulling back. So I was looking to follow this overall trend for a short-term short position. And we basically had a couple of points to this trade. So first of all, the momentum to the downside made this a short. We had a pullback here, and then price broke and closed below the previous daily low. Now, I talk about this in my video of last week, so I'll include a link to that above, talking about these key daily levels. And once we did that, for me, that showed the momentum was continuing to the downside. And then I brought in the confluence of the Fibonacci retracement from the previous pullback to the low. And this is where I marked a trading opportunity for a short. So I set my order here in the middle of the 3 levels of optimum trading entry, and my stop was just above this pullback at 20 pips. And I was originally aiming for a 1.5 target, which was a break of this low. Now, as price pushed down and it came level with the low of the day, it broke the previous daily low, but then it pushed back up. And as we got this little retest here where price came down and then it went back up again, it was clear to me that we were losing momentum. It was getting onto the evening here anyway, so I knew that the volume was going to die off. So in that instance, I decided to just close my position. So I ended up getting out around about this level here. It was around about this key level that I closed the trade during this consolidation. So I took a short win here. Fair enough, I could have gotten out at the lows and made 1R, but at that point I thought the trade was going to continue down and it didn't. So I managed to just take a very small win for the Monday, a little profit cushion on my account. And in the end, it was a good job I did, because if I had just left that to trust my trade plan, then during the Asian session, it would have actually hit my stop. So that was trade number one taken on the Monday. On the Tuesday, I didn't actually trade because we didn't get a clear break of this daily level until later on. And for me, it just went outside the session time. So it went outside of my active trading time. Moving on into the Wednesday, I did get a trade here. And again, this was taken on the 5-minute time frame. So here is the daily play out on the 5-minute time frame for the Wednesday. So we opened at this level here, and for the most of the morning we were consolidating around the daily open. And during the London session, we didn't really get any movement. It was just ranging. Well, I just made these a lot bigger to just see clearly what price was doing. And for me, it showed that we had opened up, we dropped down, we'd pushed up, but we kept coming back to this open and price was losing momentum to the long side. Then we got a very strong push down after the London session. And that was when I thought it was clear that we were going to continue down, because it broke below this daily open, below the previous low of the day. The momentum was going down. So for me, that just turned into where's the best place to get short for this trade. And once again, I brought my Fibonacci retracement tool from the previous high, which at the time I took the trade was at this point in time here. So I used this previous little pullback before the low here, and I set my short at 96 because for me that was in this optimum trade entry level, and it was also just below the key institutional price level at the whole dollar, the 1.26. Now I set a larger 15 pip stop, and my original target for this once again was 1.5R. I was looking to break the previous daily low. So I got into this trade around about here. It was after this pin bar rejecting the highs. But as you can see, price consolidated a little bit before it dropped. Now, once we got this drop down here, I then set another order at the same entry. So effectively, I was doubling my position. And when price rallied up here, that was when I got triggered into this again. So I was in two positions. And at this point, my first position had that original 1.5R target. And my second, I was aiming for just 1R just to bank some profits. So my second position was actually a little bit higher up here at the 98 level, which was this trade here. Now, as you can see, this hit the take profit at 82, which ended up being the 1R position. So I managed to get one position hit for that trade. The second trade, after the first one hit, I did something different. So at this point in time, my first position had hit the 1R target here. And then my second trade, I decided to then set a break even stop, which pretty much got hit straight away. Now, this was just an extreme conservative approach to trading because it had been such a slow, choppy week. It was Wednesday, and as you can see from the overall flow of the market, it's very slow. There's not much volume coming in. There's not much movement. So I was just really trying to bank and protect my profits. At this point, I was up 1.5R on the week, and I wanted to stay that way, which I do still believe I made the right decision. Even though if I had let the original trade play out, as you can see, it may have just been in drawdown for a little bit of time. It would have eventually hit that original 1.5R target, and over the evening, it would have actually trended and moved nearly 3R, even though I would have been in drawdown for a short amount of time. So it was a valid trade plan, and it could have made a lot more money than I actually did. But as I said before, I'm still glad I left it and got out, because it's always better to protect capital. So that was Wednesday's trade, and my final trade this week was taken on the Thursday. So that's down here. Now this was different because the first two trades were short positions. The trade I took on the Thursday was actually a long. And that is because of this really important piece of price action that I read. Let's have a look at that now. So here we are on the 5-minute time frame looking at Thursday morning, and the all important bit of price action that I was looking at was in this area here. Now let's have a look at structure first. From the previous day, we had a low here, price pulled back, it made a structural high, and then it made a new low. Pre-London session around about 6:30 in the morning, we had a strong push up here. We'd already broken the previous daily low. Now that's really important because that got broken before London, which means it's quite unlikely it's going to get broken again. It showed to me that this move was getting exhausted and we were going to maybe move to the upside. Now we had some volume come in. You can see these bullish candles are quite large, and we pulled up here and we had a little pullback, and at 7 o'clock we had this huge push up. And the important bit of information is both the size of these candlesticks, they are large, and the fact that it broke and closed above this previous structural high. In fact, it went up quite far. And just before the 8 o'clock open, we'd already had this strong push up. So the momentum was coming into the long side, and I knew I wanted to go long. Now to calculate the best entry for a long, I used the Fibonacci retracement from the low of the day, and I set it at the high here. Now, unfortunately, I had an order set at the optimum trade entry level here at 61. And price came very, very close, but it missed my order. So I actually missed this opportunity here. I believe I had about a 15 pip stop. And I was aiming for a 1.5R target. So if that had hit, it would have made a profit there. So there was a missed trade. It was a trade I had set in my broker, just didn't get filled. So that does happen a lot with trading, and you have to find peace with that. Otherwise, you could get emotional and it could get pretty expensive. But that's why Forex is brilliant, because there are multiple session times. And although the London didn't pull through for me, in the New York time, we did have an opportunity, and that's where I got long again. Now, it was the same idea. It was the same trade. I just extended the fib right to the top here because I felt like we would have a deeper pullback, but I felt this area would hold because it was above this key daily level, and also it coincided with the institutional price level. So there was a lot of confidence here for me to make this trade a strong trade. And I had an entry sitting here at 58. So this is where I got in. I had a 15 pip stop below the lows, and I took two positions. So the first target was for 1R, and then the second was for 2R. So I was aiming for two different profit targets. Now, the problem with this trade that I experienced was I got into this as price was pushing down here. So I was into this trade during this bit of consolidation. Now, at this point, we started to push up here. It was 20 past 1, and at 1:30, there was news due out for the dollar. Now, I don't usually get into a trade before news is released, but in this instance, I wanted to get in while it was in this area because I really believe the technicals. However, as price started to push up, I started to get cold feet because once again, I realized we were in a slow market condition, and I wanted to protect my capital. I knew that news was coming out, and if the news was going to be positive for the dollar, which meant the pound dollar could drop, I could be in a bad position. So as price was pushing up, I actually got out of both of my positions here at around about this point here, 71, which collectively meant that the two positions made about 1.5R, which is around about $750 on the account. So it was still a nice win. And I would have rather have done that and managed my risk. Now, as you can see, this big candle here, this pin bar, was the news release, and it was good for the dollar. So it did mean that the pound dropped. But the technicals held, it tapped this key level and it jumped up. So overall, I could have stayed into this trade. And as you can see, it continued up and I could have made a lot more money. This is one of those situations, once again, where I could have made more money. But I was happy I prioritized risk. I do believe it's always very important to do that if you are unsure. Now, since then, there was actually another opportunity to go long here, and I missed that. I don't really know why. I think I must have been busy with the boys, but it came back down to this key daily level, and it had another nice big bullish engulfing candle at this level. So there would have been another opportunity to get long here with a stop below the lows, and actually went up really quite far. But it's always good to look at this in hindsight. It can be a lot easier and more clear to see when you are not trading in real time. So as it stands, those are the 3 trades that I took this week, trading a combination of price action, market structure, key daily levels, Fibonacci retracements, and institutional price levels, which I will talk about more in my video next week. So make sure you are subscribed to the channel below so you don't miss that video. Meanwhile, if you've enjoyed this, please do let me know by hitting that like button. If you've got any questions or comments, leave them below. I'll get back to you as soon as I can. And thank you for watching the video. See you next time. Bye.